Hey guys, Mike here. So I usually say, oh boy, what a day in the market, or what a interesting day in the market. But the truth was, it was just a weird day in the market to me. And I mean, if you're at your work, and maybe some of you were, and you looked at your phone today and you said, wow, the Qs are up 1.3%, man, my portfolio must be rocking. Well, if you own certain stocks, that was the case. But if you own the majority of the rest of the stocks, not quite the case at all. And I'm going to show you what I'm talking about when it comes to that. Some very key levels that are definitely being challenged right now. That is for sure. But there's one thing we'll definitely get into, and that's going to be the dollar. And something to watch out for with the dollar. I've been mentioning it, so I did a little more digging today. And this is going to be critical if this happens or not. And if it does, I can definitely see the dollar weakening, which we'll talk about why that's good for stocks and everything. But, I will say this. If you probably turned 18 in maybe 2001 or something, 2002, you probably wouldn't understand this chart or understand what I'm even talking about because you never experienced it. But this is the interest that we're actually earning right now on our money. And you can see, obviously, it's been skyrocketing since rates are skyrocketing. But when you look over here, you can see after the 70s coming into the 80s and 90s, right? Like you could actually put money away and make, I mean, anywhere. I remember getting CDs in the early 90s for anywhere from 8 to 12%. And, you see that where I'm circling there. You could actually, you didn't have to be in the stock market to earn 8%. You could be in CDs, things of that nature, because rates were higher and, making money in a very risk-free way, right? But then, of course, the dot-com bubble happened and '08 happened, and then the government just completely took over the market. And so since they were the biggest buyers of mortgage-backed securities and bonds and stuff, guess what? They didn't want to pay. They didn't want to pay any yield. So, that's why that went away. So now you have to actually put in some risk to earn, 8 to 12%, even though we are earning between, 4 to 4.75 or somewhere in there. Put in the comments if you're earning more than that and let us know where you're getting it at. Now, something key here is, and I'm not a Forex trader, so if you're out there and you're a Forex trader, let us know and lend us your expertise here. I've never pulled this chart in my life. This is the first time, but I've been talking about Japan. So when you look at this, is the US dollar versus their yen, right? And you can see what's happening. The dollar's crushing it. It's crushing everything around the globe right now. And that's good if we're traveling, obviously. But when you look back in 2022, what happened? We're almost at the same level. We're getting up there again. And in 2022, Japan did come out and intervene. And you saw what happened to the dollar. And so this came out today. It says Japan's finance minister authorities were closely watching FX moves with a strong sense of urgency as it neared the 150 mark, but declined to comment on whether intervention was possible at this point. Now, last time I talked about 2022, this was September 22nd, 2022. Japan intervenes to stop yen slide after BOJ holds rates super low. And this is what I had to look into. There's two ways they can do it. They can buy their yen back by obviously selling dollars because they keep a reserve, and you see it's 1.33 trillion of foreign reserve currencies, right? And a lot of that's going to be the dollar. And again, I don't know how the whole intricacies work. I just know if they decide to intervene to save their currency, or not to save it, but to get it to come back up, stabilize it, that means the dollar is going to be under attack. And so this is where, again, if you're a Forex trader, feel free to let us know what you think. But as we approach that level, you can only imagine Japan is going to have to intervene at some point in time, which should be a headwind for the dollar, I believe. Again, correct me in the comments if I am wrong on that. Now, and guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom. For those who are new to the channel, the reason why the dollar is so important for many levels, obviously it can be a headwind for stocks, but for earnings more importantly, right, which we're going to come into earnings season. Remember, the larger companies like Apple, for example, over 50% of their revenue comes from other countries, which means when they earn that revenue, they have to convert it back into US dollars. If the dollar is strong, like it was last year, it hurts their earnings, okay? When the dollar went down, first and second quarter looked a lot better, especially for the big boys, because what was happening to the dollar? It was much weaker, it was much lower. So they got to keep more of that money when they converted it. And so what's going to happen coming up here when they report this quarter? What's the dollar been doing that whole quarter? It's been running up. And so they're going to keep less dollars. And so in first and second quarter, it masked a lot of problems, right? Because you can look and go, they must have sold a way more iPhones than they did this quarter. Not really, because they're literally getting to keep hundreds of millions of dollars just in a conversion, right, of currencies. And so it masks a lot of stuff because, you know, most people are not going to look down and look at what the growth is, right? Most people aren't going to do that. They're just going to look at top and bottom line and go, oh, it's great. They hit it. Woohoo. Well, now that's going to be a headwind for them. Okay. So that, and remember, what's holding up the market, as we're talking about right now, these stocks. And so, you know, going into that, if you looked at it, what I was telling members this morning was, I was like, if it wasn't for the Magnificent Seven, QQQ would be down 1.5% today. The SPY would be down almost 2% for sure. Because, you know, when we look on this and look at the sectors, the only thing up is XLK and XLC at that point in time. And, you know, then we get into the stocks because, again, you're looking at it going, wow, the Qs are up 1.3%. This is fantastic. But, I mean, especially in the utilities, we're just getting destroyed today, down 5%. Energy's down 2%. And so, you know, financials was breaking down. But when you go into the stocks, you know, look at this. Look at all this sea of red, right? These are all really the main stocks. There's thousands and thousands of stocks out there, but most of these stocks you're going to recognize, right? These are the big boys. And you got, you know, financials down, banks are down, travel's down, materials are down, even, I mean, discretionary, you name it. Even, I mean, the high beta stuff, like the ARK stuff, down, right? Crypto stocks were doing pretty good because Bitcoin was pumping. Chinese stocks absolutely in the toilet. And then you go down to EVs, they're getting crushed, right? And then you go down right here to the semiconductors, and a couple of them are doing well, but most of them are not doing well. And then all of a sudden you arrive to the big boys. And there's your Magnificent Seven, buddy. And even Tesla at one point in time was green too. It had a big comeback from 239, I believe it was, in pre-market. And we'll get into that in just a minute. But again, this is what was completely holding up the market, which is strange because what was going on was you had yields rallying, the dollar rallying, VIX is up freaking 5%. And it was just like, wow, this is very strange. And of course, we end up having a big pullback. Now, when you look at the SPY, this trend line right here, which goes back to October, is being heavily challenged. It broke down through it today, came back up, got rejected. So again, we'll see if it can get back up and reestablish this knot, or we finally start going to that level I talked about in yesterday's video. And then when you look over here at IWM, I mean, IWM, this trend line we talked about, 1, 2, 3, was going to be the fourth touch, and it came down all right, and then it ended up going right through it. And so, you know, it kept bouncing, finally broke down at the end of the day, trying to recapture it. You know, again, does it have to bounce off that trend line? Not really, because there is a lot of support down in this area right here, as you can see. And so, again, you could definitely get a bounce. And I just wanted to see if it would bounce off that trend line. But, again, it didn't seem to want to do that. But, again, there's a lot of weakness. And, of course, I came across this meme this morning. And, I mean, this would describe it. IWM on the left, you know, looking out at darkness. The Qs when it was up 1.3%. Looking at sunlight going, this is great, right? Because, again, IWM does not have a Magnificent Seven. And I finally found a chart to back up what Jeremy Grantham was telling you guys last week in that interview I showed you, which was just such a large percentage of the Russell 2000 stocks don't have any kind of positive earnings to them. And when you look at this, you can see that's gone up over the years, right? And we're at an all-time high now. And this percentage of non-earners, and it's about 36, 37% right there. If you take out biotech, which they tend to have a lot of, it comes down a little bit, around 28%. And so that is a lot of stocks right there in the worst environment it could be in to not have any kind of earnings, okay? And so, again, these are where your bankruptcies will come from, not the QQQ. Now, looking over at Apple, Apple came out roaring. It was like, bam, here we go. Remember, the biggest weighted stock in all the indexes, right? And it comes out roaring. You're thinking, okay, maybe they're going to try to save it again because it's Apple. I mean, it gets treated different than any of the stock on the index, right? And I'm looking at this going, okay, we still got lower highs happening. We'll have to see if we form another lower high over here or not. Still hadn't touched the 200. Still hadn't completely filled this gap yet. And again, it's coming to resistance. But if there's one stock they try to save, it is Apple because they know it's the bellwether. If this one starts showing extreme weakness, other stocks are definitely going to be showing extreme weakness. This one's the most bought stock out there as far as into retirement funds, everything else you can imagine. This is it, right? Now, Tesla is the most traded stock. And you can see we talked about this rising wedge, and pre-market it broke down. We'll get into that in just a second of why. But then immediately recovery. I mean, great recovery, moves back in there. And then, of course, as every other stock around lunchtime, started to sell back off. And in reality, it started to hit back in. And maybe they started noticing yields and the dollar and everything going up, you know. Now, I am going to extend this trend line. We're going to get rid of this one. Same thing as we talked about with Google, which you'll see. But I've showed you before. That will become resistance. And so at least I think it will. We'll have to see, but I think that will become resistance just like it has for Google and so many others right now. And so, looking at this, you see there's good support around 240, 550, 246 right there. And we scroll back out to the daily. Again, you can see where we're talking about when we say, 257 is the one where you want to see it break over. If it breaks over 257, definitely going to be filling that gap right there and go for a really quick move. I think you see calls start rushing in if we break 257. So keep that number in mind. But we're not even that far down from that down trend line right there, the one right below it. I mean, we're not that far. And so there's a whole lot more room to move up than down unless it decides to break that trend line, which, I mean, that would cause a cascade of puts come rolling in. You can almost bet money on that. I'm going to put another short-term trend line in right there just in case we do break 257. See if we get a third touch and a rejection off that. Sometimes it tends to work out, so it's just for my benefit. And when you look at why Tesla actually dropped in pre-markets because they missed their deliveries, of course we knew they were going to miss their deliveries, missed them by like 22K. But they, when you shut down your factories, try to upgrade stuff, not a surprise, right? I'm sure there was some weakness in China still or some other countries, but this was bought up very quick. I mean, I told you, Tesla has a huge following, and those dip buyers came in with a quickness and bought it up. Now, NVIDIA, this is another one that was just raging today, very strong today. The 50s where it got rejected in the day, but when you look on the daily here, RSI is above 50, bullish MACD cross right there, especially if it gets back over that 0 right there. So this one is definitely showing strength, right? I mean, that 100 held up for multiple days right there. And really, this one started showing strength on Friday when it broke out of this falling wedge right here. Got a nice retest and then exploded up and then gapped up this morning. So, again, on the short-term time frames, when I look at this one overbought and everything, and the MACD looks stretched, I don't even count it because it's NVIDIA, right? And how many times did I show you how far and how long we were overbought and overstretched for? Didn't seem to matter. Now, break above 454 puts us to 467. A break above that is going to put us to 486. And you know how this one likes to move. So that might happen very quickly. Now, Google, like I told you about, this was once it broke down out of that rising wedge, we got, what is it now, 4 different rejections off that trend line. And so we'll definitely keep that in there, but it is slowly grinding up. It's rejecting off that trend line. It's slowly grinding up. It's holding that 50 right now, which is a good thing. You can see down there with the MACD, with the RSI, trying to turn back up, get some momentum moving into this on the daily. And so again, this one doesn't move like Tesla or any of the rest of them, NVIDIA. It's a slow grinder if it's going to continue to move up. So it definitely needs to get above, looks like around 138. To see any kind of more life held in this. But you can see, pulling back out, you can see the air is going to get thin up here, right? I mean, that's all-time highs to the left right there. So if you can break above that resistance, we can continue to grind. Now, Meta has been a monster over the last like 3 days. But again, what is it? Still sitting in a symmetrical triangle right here. So to me, it's still a 50-50. Right now, it has some momentum to it. But if you look at the RSI, it's like the buyers and sellers going through September and October are like, I mean, who's in control? That's really what you got to figure out. Let me know in the comments what you think about that. Whichever way it goes, I think it's going to be a big move for sure. There's no doubt about it. I mean, it did have a false breakdown. The 100 saved it. It's still over that 50 moving average right now. But you can see, I mean, if we end up breaking up, and I think we're going to absolutely end up hitting 314 with a quickness. And then if we break down, we're going to end up hitting around 289 with a quickness, would be my guess on that. Now, no earnings to worry about tomorrow. We do have Fed speakers like we had today. You're going to have the JOLTS job openings, JOLTS job quits. So again, this one usually ends up definitely affecting the markets because it's going to come after the market opens, okay, like 30 minutes after. So just pay attention. Usually you start to see a move in one direction. It might be a false move, right? And so that news comes out. And the JOLTS job reports, because the next day we have ADP, and they usually contrast one another, right? It's never lined up. One comes in hot, one comes in mixed coal, whatever it is, and then they end up revising them down the next month, way down or something. So again, what's the market really looking for? What's bad for the economy, right? It will be, the jobs numbers coming in really low. But, if you see it come in really hot, the market may go, ooh, they're going to have to sit here and keep raising rates in November or something. You just don't know what you're going to get. Or they might say, that's great, the economy's still strong, let's keep going. It's so funny how it works. Because remember, the news, they use it as an excuse to move the market in whichever direction they want to do, whichever way they want to shift liquidity at that moment and stuff. But right now, it's like I said, the first week of October is going to be very interesting to see how the market it goes right now. Tech is basically holding everything up. You got, the utilities are breaking down, financials, they're breaking down. And so we'll see how long the Magnificent Seven can hold this market up before others start to participate, right? And so that's just some things you got to keep in mind. But it's all about that dollar, yields. Oil did take a break today. We'll see if that starts back up tomorrow or not. And so that's the key. Is if they can ever get yields to top out, the dollar, all that stuff, to finally start taking a break and moving down, you're going to see the markets absolutely fire up. That's just the way it's going to work. But again, we'll have to see. So let me know in the comments, what you think. Again, if you're a Forex trader, please give us your expertise on Japan, the dollar, and all that good stuff. We'd love to hear it and stuff. So, and I would greatly appreciate it so we can share it with everybody. Just put it in the comments, and I'll share your comments with everybody. So anyway, hope you guys got something out of it. Really appreciate it. Please hit that like and subscribe button. Share the video as usual. You guys are the best, and I'll see you tomorrow.